As of this very second, Rezolve AI, trading under the ticker symbol RZLV on the Nasdaq exchange, is changing hands at approximately $3.01 per share, showing an intraday upward movement of roughly 3.7% since the opening bell rang this morning. The market is currently active, and we are witnessing a fascinating tussle between buyers and sellers right around the $3 psychological support level. The stock opened higher, near $3.13, dipped slightly to test the $3 floor, and is now seeing a resurgence of buying pressure that suggests the bulls are attempting to reclaim control of the daily narrative. If you are watching your trading terminal or refreshing your screen on your Fidelity mobile app, you are likely seeing this volatility play out in real time, with volume ticking up as traders digest the latest movements in the broader artificial intelligence sector. When most retail investors hear about a new AI stock, especially one that recently came public via a SPAC merger, like Rezolve did with Armada Acquisition Corp. 1, the immediate expectation is skepticism. The market narrative, the expectation, is that this is just another company capitalizing on the AI hype cycle, offering a generic chatbot solution that wraps around existing technology with very little proprietary value. You might assume this is a company destined to fade into obscurity once the initial buzz wears off, trapped in the penny stock purgatory that claims so many former SPACs. That is the expectation. However, the reality of what is happening under the hood of Rezolve AI is significantly more complex and potentially far more disruptive to the global commerce infrastructure than the casual observer realizes. The reality is that Rezolve is not building a chatbot. They are building the connective tissue for what is known as Agentic AI, artificial intelligence that doesn't just talk, but takes action, executes transactions, and fundamentally alters the friction of buying and selling online. If we look closely at the price action today, we are seeing a decoupling from the typical meme stock behavior. While many speculative assets are bleeding out, RZLV is holding its ground, which often signals accumulation by entities who are looking past the daily noise. We need to examine why this asset is behaving this way. In the last few sessions, the stock has traded in a wide range, bouncing from lows near $1.07 to highs over $8 in the last 52 weeks. This extreme volatility is characteristic of a low float stock undergoing price discovery. But the recent stabilization above the $3 mark is what technical analysts would call a consolidation phase. This is where the weak hands, those looking for a quick flip on their Robinhood app, are shaken out, and the stronger hands, perhaps those managing deeper pockets in Fidelity wealth management accounts, begin to build positions. The volume today is already pacing to match or exceed the average daily volume of roughly 15 million shares, indicating that interest is not waning, it is intensifying. To understand why this stock matters, we have to look beyond the chart and into the engine of the business. Most people think of e-commerce as a solved problem. You go to a website, you click Add to Cart, and you pay. But for mobile commerce, this process is broken. The cart abandonment rates on mobile devices are staggering, often exceeding 70%. This is the problem Rezolve is attacking, not with a better website, but with a proprietary AI stack called Brainpowa. Unlike the generic large language models you might be familiar with, Brainpowa is engineered specifically for commerce. It creates a situation where a user can interact with a brand's AI and instantly purchase a product without ever leaving the interaction window. This is what we call conversational commerce, and it is the holy grail for retailers who are desperate to convert mobile traffic into actual revenue. Let's pause and consider the broader context of the market. When you look at the titans of the industry, when you analyze the trajectory of Tesla stock or the meteoric rise of Nvidia stock, you see that the biggest gains didn't come from improving an existing process by 10%. They came from completely removing a step in the value chain. Tesla removed the dealership and the internal combustion engine. Nvidia removed the bottleneck of serial processing for graphics and AI. Rezolve is attempting to remove the checkout page entirely. By integrating their BrainCheckout technology, they allow a transaction to happen instantly within the conversation window. This is what we call conversational commerce, and it is the holy grail for retailers who are desperate to convert mobile traffic into actual revenue. Now you might be thinking, that sounds great, but who is actually using this? This is where the story gets interesting and where the reality further diverges from the expectation. The expectation is that a small-cap company like this has to fight for every single client door to door. The reality is that Rezolve has secured strategic partnerships with the two biggest gatekeepers in the digital economy, Microsoft and Google. These are not just logo on a website partnerships. Rezolve's technology is available through the Microsoft Azure marketplace and is being co-marketed by Microsoft's sales teams. When a massive retailer using Microsoft's infrastructure wants to upgrade their customer engagement, Rezolve is the solution being presented to them. Similarly, their partnership with Google Cloud validates their tech stack on a global scale. If you are an investor using a Fidelity trading platform or managing your own portfolio on SoFi Investing, you know that validated partnerships with trillion-dollar market cap companies are often the precursor to significant enterprise adoption. Let's shift back to the immediate stock performance. Today's 3.7% gain is happening against a backdrop of macroeconomic uncertainty. We are seeing capital rotate out of defensive sectors and back into risk-on assets that have high growth potential. Rezolve falls squarely into this category. The company recently reported a revenue surge of over 400% year over year, bringing in over $3 million in the most recent quarter. While the base number is small, the rate of change is what algorithmic traders are latching onto. Algorithms don't care about the brand name, they care about the second derivative of growth, the acceleration of acceleration. When a company accelerates its revenue growth while simultaneously maintaining gross margins, it triggers buy signals across high-frequency trading desks, which contributes to the buying pressure we are seeing right now. However, we must be responsible and look at the risks, because no analysis is complete without a look at the bearish case. The company is burning cash. They reported a net loss of nearly $29 million. This is typical for high-growth tech companies. Remember that Amazon didn't make a profit for years, but in the current interest rate environment, cash burn is a serious metric. Investors using tools like Schwab Intelligent Portfolios or looking at Fidelity mutual funds tend to avoid companies with negative cash flow unless the growth story is impeccable. Rezolve has about $10 million in cash on hand, which means they will likely need to raise capital again in the future. This brings up the risk of dilution, where the company issues more shares to raise money, thereby reducing the value of existing shares. This is the sword of Damocles hanging over the stock, and is likely the reason why the price is capped around the 320 mark today. Sellers are anticipating a future raise, while buyers are betting that the revenue growth will outpace the need for cash. Despite this financial tightrope, the institutional interest is notable. We have seen reports of executives from Apple, Google, and Microsoft jumping ship to join Rezolve. People at that level do not leave secure, high-paying jobs at the world's most valuable companies to join a sinking ship. They join because they see the technological edge. This talent arbitrage is often a leading indicator of future success. If the engineers and sales leaders are moving to Rezolve, it suggests that the internal technology, the brain suite, is robust and capable of scaling. This adds a layer of confidence for the retail investor who might be considering adding this to their Robinhood investments or their individual brokerage account. Let's talk about the specific product mechanics, because this is crucial for understanding the long-term value. The Brain Suite consists of three parts: Brain Commerce, BrainCheckout, and BrainAssistant. Brain Commerce allows a consumer to ask a question like, "Do you have this dress in red and will it arrive by Friday?" and get an instant, accurate answer based on real-time inventory data. Most chatbots hallucinate answers. Rezolve's architecture is built to retrieve factual data from the retailer's back end, minimizing what is known as AI hallucination. BrainCheckout then allows that user to say, "I'll take it," and the payment is processed immediately using stored credentials. This reduces the friction that kills sales. BrainAssistant is the internal tool for employees. If you think about the efficiency gains, it's massive. Now, I want you to engage with this idea. Comment below how many shares of Rezolve AI you currently hold, or if you are waiting for a specific dip to enter. Also, let me know, do you trust an AI to execute a purchase for you, or do you still want to click the buttons yourself? Your psychology as a consumer is exactly what this company is